Yeah, the crude oil price is holding firm. It actually has been quite an eventful week for that one. We are closing this week on the positive. And the latest trigger, of course, comes in from the fact that the markets are expecting the crude oil prices to continue to be strong. Even as the U.S. shale output is expected higher, it is about the demand and the global inventories declining, which are a positive. But having said that, we are holding above $60 per barrel. To get a sense on what's happening in the global markets and what to expect for India and in 2018, we are now joined by R. Seetharaman, who is CEO, Doha Bank. Mr. Seetharaman, hi. Thank you so much for taking time out for us. It is contradicting fundamentals that we are seeing in for the crude oil prices. On one side, the OPEC supplies are declining. The global inventories are on a lower side as well. But the shale output from US, the output from Canada, Brazil, etc. is expected higher. What are you looking at? What is your sense for 2018?
We have oil price will stay between $60 to $65. There are enough reasons to believe global supply chain is disrupted and dollar is also weakening. Oil futures are likely to go up. So oil price will cost between $60 to $65 for 2018. As far as the natural gas is concerned, last month we had the gas exporting countries got together in Bolivia, and they're also reaching 11 countries, reaching some sense of consensus. There is a possibility to stabilize gas between $7 to $8. So it's synchronizing in total terms. As far as India is concerned, India can find a better mix in terms of natural gas and oil. Oil we have to reduce, and natural gas for long-term sustainable economics we need to have more energy efficient environment from gas. That is the approach we need to take.
Well, absolutely, especially when it comes to India. What is your sense? Because we budgeted crude at $55 in the previous fiscal. We're looking at 65 of a maths in the coming year now. What would these crude oil prices mean for India, and what exactly should there be a mix that India should be watching out for?
No, we have to change the mix. That is precisely the reason. See, we cannot just import oil at 65 and sustain our economic momentum. A simple silver bullet solutions like GST as well as demonetization, which are financially inclusive, globally recognized, we had misinterpretation in the domestic front. What we need to look at is if we have to maintain 8% plus growth, we need to change the mix, energy efficient, low cost natural gas, and that's a bigger opportunity. That mix has to come through investment partnership. It's capital intensive. We need to bring those countries which are exporting has to come here as investment partners. And that's the only way you will reduce the import bills. Then you will also have, whatever be the momentum, whether it is power or electric sector or city gas distributions, all have to be rationalized. Today we need an integrated policy framework and regulatory alignment in terms of simplification. If that is not achieved, our energy will become a major constraint for our overall economic momentum.
Mr. Seetharaman, I also want to get your take on the digital currencies for oil payments, because that is a theme that is being talked about far and wide. What is your sense on cryptocurrencies? How do you see that as being part of the oil payments for many of those exporting and importing countries?
Digital currency is going to redefine the overall payment and settlement process. We have with the digital evolutions, especially it's moving from digital banking to digital ecosystems. I think we are in the right direction as far as adoption of the digital policy frameworks. We need more convergence, especially in the banking side. We can institute a complete digital settlement process. We have to unify it in total terms, including green banking and green settlements. And that's another process where we need to look at it. This solution to the reduction of the import bill is also lies in substituting more renewable projects, and funding can come through, settlements can come through the green banking process, which is where investments are lending a portion of the risk-weighted capital of the bank should be invested on the digital side and also renewable side. These are integral part of the overall long-term vision to bring in the value advantage in the digital ecosystems. So cryptocurrencies are going to be there. It's not bitcoins. That is absolute nonsense. It doesn't make any sense. But as digital currency will be the way forward.
All right. So while you've already said, we already have spoken about the crude oil prices forecast for on the higher side, but on the lower side, where do you see a support coming? Because various experts that we speak to on the channel either talk about 80 on the higher side, and there have been some reports of 40, 45 on the lower side too.
Well, we have OPEC is holding tight. They are rationalizing the supply chain, and demand is marginally going up. Unless there is a political unrest or a blockade, where we see oil-producing countries are not in a position to have supply chain, you will have, moderate additional supply. And if OPEC is going to maintain their stand, it will hold at between $60 to $65. There's no question about it. It will not come back to 40. At the same time, there is no reason why it should go beyond, 65. And that's the optimum I see on an average for 2018. Whereas we have reasons to believe that dollar is weakening, and the oil futures are likely to go up. That is also have a sense of balance for the oil price. Oil futures will strike at 65.
All right, so that really is the view coming in from Doha Bank for 2018, and as Mr. Seetharaman is pointing out, that digital currencies is the way forward into this, and something that the Indian markets should be looking at, because importing at $60 plus is something that's really not economically viable.